What's going on, everybody? Julian here, J Lewis Trading, doing a video recap on VT. This is going to be a video lesson as well. And so, what we're going to be talking about is VT. It's a therapeutics company, biotechnology sector, and today there was a catalyst that made this thing pop. So, first and foremost, when I was looking at this pre-market, it was moving around a little bit. It was there. We talked about it. And what we did was I looked to see if there was a news catalyst. There definitely was a news catalyst. I don't remember off the top of my head what it was, but it was positive, and there was the idea that this thing could potentially break long. Out of the gate, VT did absolutely break long, and it was a pretty strong move to the upside. Now, I want to tell you that I made a mistake on this trade right through here. I like trading flat top breakouts. My success ratio with flat top breakouts is not as good as dip buying opportunities. That's the truth. And the reason why I decided to get into this flat top breakout is that it was moving up very, very well. There was a nice pullback with that 9-day exponential moving average hold right through here. And then we stepped up on volume, and I really liked that. I liked the fact that the volume was stepping in, and there was a bit of a bottoms up buy signal on the MACD. Now, the problem with this particular MACD setup was it was actually just setting up into an already overbought situation. The real value, in my opinion, and I will prove this in a moment, to buying the MACD and leaning in on the MACD is making sure that it is in a hyper oversold situation. So, with respects to this particular trade, I got stopped out on this one. It is what it is. I had my stop just below this level right through here, and so right through here was the area that I got taken out. Having said that, what you'll notice is that we actually put in this floor right through here, and we also had some VWAP support. Now, it did dip below, but what you will notice right through here is that we actually had everything on a dip buying opportunity that we needed. So price action had rallied up very, very strong. It had pulled back. It set this pivot. It had pulled back again, created this floor right through here, a little bit of consolidation. And then from there, it squeezed. And you can see that on that move, that the MACD was signaling a buy right at the zero line. That is a much more advantageous place to use the MACD when you're at the apex of a high probability pattern versus using a high probability pattern where the buy signal is signaling you into an already overbought situation. Hope that makes sense. So this thing not only popped up, but it pulled back and created a retest of that VWAP. Now, what I was looking for, first and foremost, was a break a high a day. And then from there, I was using my Fibonacci projection tool to get into a lower profit level right in and around that 236. Now, that 236 for me did not come. I had my levels marked off at these higher areas. But what I did actually was I took this into all the way up into this level right through here. And then I actually put a stop at, I want to say, 360, which is where I got out. So I was in at 330, out at 360, 10% move on that one. Not that bad. And that was, trade number one. Now, trade number two, which I did not trade, but I watched, was this exact same setup just a little bit later on in the day. So you can see that we actually put in this nice high. We pull back. We do the same thing. Hold VWAP, rally, hold VWAP. And what do? On that second touch, we've actually created trendline resistance right through here. So now the idea is that based on that buy signal again on the MACD, we actually want to trade this and really have faith in the strategy. Trade this area right through here and go back up to our previous high and use that as a potential target. You can actually see in this particular situation, which I did not trade. I traded the first time I got stopped out. That first pullback I traded. Second one, I stepped away from my computer, and you can actually see what ended up happening here. And that is that it chopped around a little bit, and then it gained a little bit of strength and moved straight into high of day, where you again would have made a pretty decent little profit on VT. So there were two trades there that really made sense. The first trade that I put on didn't make a whole ton of sense based on where the MACD was. I want to really touch on that one and put out here why I was taking this. And the reason why I was taking this is I thought the setup was okay. I did not like the MACD. As soon as I stepped into that, I knew that I had committed an error based on my trading plan. But the fact is, a number of trades in front of this one had not worked out for me, and I was really just looking to get into something that was going to work for me. Now, fact of the matter is, if I didn't take this trade and I only traded this pullback right through here to target, and if I would have gotten long here to target, fact of the matter is I would have had a fantastic day, probably up in the 16 to 20% percentile area for the day. Now, because of my first initial trade, I had to come back out of the red, and it wasn't as good as it could have been. But what it did do was it gave me a bit of a psychological a check, if you will, in terms of, okay, now I know what I'm looking for. It has reestablished my thought process and my discipline. And so VT was a great teacher today because what it did is it helped me get back on track. It checked my trading and my strategy, and it tells me that, you know, you can go 3 or 4 trades against and have 3 or 4 trades that don't work out for you, but then you lean in on your strategy, and then you have one trade that works for you, and it'll pay for all of the losers, right? So this is the beauty about having a trade that's got more upside than downside more often than not, is that you can be wrong a few times and have one nice trade and get back into the black. Now remember, there is what's called the hot hand fallacy. Now this is a two-sided thing. About a week and a half ago, I think I traded maybe 8 or 9 straight profitable trades. And through that, for every single win that was coming in, I kept reminding myself, hot hand fallacy is not a real thing. You are not on fire here. You're just hitting the right side of the trade. But that can be reversed. Right now, I think I went 4 or 5 trades against, and it's the same thing. It's the hot hand losing fallacy. So don't let it get you down. This is part of the psychological thing with trading, is that you got to be able to grin and bear a couple bad trades that go against you. But if you can check in and look at it and say, oh yeah, I did follow my strategy top to bottom, I'm good, then you just hit the wrong side of the probabilities. But once you hit the right side of the probabilities, for every 1 or 2 that work for you, that'll afford 5 or 6 that don't go for you, right? So at least you have that 3, 4 times upside versus downside. You just got to keep going through the methodology very methodically and making sure that you understand everything that you need to see. Rally, pullbacks, reset on the MAC, trendline resistance breakout, previous candle low is your stop level. You want to make sure in a perfect world that the 9-day exponential moving average is over the VWAP, and you want to make sure that those things are all in play for you. So I'm just going to close out on this, and if you don't have pen and paper to make these notes, you might want to pause this now. So based on you pausing the video, that's what that little drag was, based on you pausing, what you want to look for top to bottom is you want to make sure that trendline resistance, right like that, is breaking out. That's the first thing. You want to make sure that that breakout is coming on the back of being over the 9-day exponential moving average, over the VWAP, and having this buy signal on the MACD. This is what you need to see. If you look for this over and over and over again, that is your edge in the market. Price action is going to move up. It's going to pull back. It's going to create trendline resistance. It's going to pop. Buy signal on the MAC, so that's a bottoms up buy signal. You're going to be over the 9-day, over the VWAP. If you look at what happened here, price action rallies up. It pulls back. It creates trendline resistance. It comes down to the apex right through here. It pops. If you look at the MACD, same thing. There is a buy signal there. That's a positive move. If you look at price action when it's breaking long, it's over the 9-day, it's over the VWAP. Mark those notes down. That's what you need to look for. And you have to make sure that you apply that to volatile stocks. I hope that some of this has helped. If you have any questions, save it for Ask a Trader. I'll see you there.